Ivorian President Alassane Ouattara says that the African Development Bank continues to be a strategic partner to a number of countries on the continent. He's opened the African Development Bank Group's annual meetings in Côte d'Ivoire. The gathering comes amid an uncertain global environment with trade wars, geopolitical instability, as well as other pressing issues. Let's go live now to Abidjan, bring in SABC News reporter Khayelihle Khumalo, who's attending those meetings. Kaya, good to see you. And we've been hearing in the last while from the outgoing AFDB President, Dr. Akinwumi Adesina. What's he been saying about the role of this key institution?
Well, very much so. A very significant role by this continental institution, Thembekile. Of course, we had from the outgoing President Adesina really talking about the highs and lows since taking over from 2015 in terms of the capital of the bank, in terms of the project, integrating the continent, making sure that also there is electricity in Africa, but also Thembekile really just exploring new ways of development in terms of climate resilient infrastructure, building the bridges, constructing those railways. It's all about making sure that there is seamless movement of goods in Africa, but really to look at also the economic outlook in the continent. We're joined by the chief economist of the bank, Prof. Orama. Thank you so much indeed, sir, for your time. Obviously, this is a very fragile global environment. I mean, we're seeing the intensification of the trade wars. How should Africa navigate this phase?
Thank you very much. Yes, we are living in a very fragile environment globally, and also a multipolarizing global governance system, and especially the Liberation Day tariffs that came from the United States created even further headwinds for many economies globally. But in Africa, I'm happy to say that the continent has continued to demonstrate its resilience, with a real GDP growth rate estimated at 3.9% at the end of this year, and moving up to 4% by the end of 2026. And this is a 0.2 and 0.4 percentage point reductions based on our estimated impacts of the trade tariffs and the trade uncertainties that we are seeing. But even at that, even after factoring all those in, 21 countries on this continent will be posting growth rates more than 5%. And 4 countries on this continent this year will be posting growth rates more than 7%. And remember that 7% is the growth rates that were estimated will be sufficient to create jobs and break the vicious cycles of poverty on the continent. So I have a very positive outlook for the continent going forward. Of course, there still remains uncertainties in terms of inflation, which has come down from 18.7% in 2024. Now we're expecting just about 13%, and going down even to single digits in 2026. Again, very positive outcome. But we have the debt challenge, which remains a challenge on the continent, but not because of the quantum or the scale of debt. It's actually because of the structure of debt, which is now going more to private creditors, and instead of the Paris Club or MDB lending. And because of that, it comes with higher interest rates and costs of debt refinancing, which will be up to $89 billion this year. 54% of that just to the private creditors. So the scale of debt in Africa is not the problem. It's actually the cost of debt on the continent. And as you may remember, the cost of debt on the continent also is escalated because of mispricing of risks on the continent. That despite the continent being the least defaulter in long-term infrastructure finance projects in the world, at 1.9% default rate compared to 12.6% in East Asia, and even 6.6% in North America, Africa still continues to pay a premium because of perceived risks and the way that the methodologies for sovereign risks discredit the poor. In this report, we'll find that actually there's a perfect correlation between risk ratings and GDP per capita, which means that the poorer you are, the poorer your risk rating, and therefore the higher the cost of capital, and therefore the less access you can get for cheap finance that will allow you to drive development. But in the midst of all this, Africa still remains the second fastest growing region in the world, and Like I said, 21 countries will grow above 5%, and 13 countries in Africa will be among the 20 fastest growing economies in the world. So it's really all very positive with regard to how Africa is bolstering these shocks. But as you know, the shocks are dynamic and continues to evolve. So we'll continue to monitor the changes in tariffs, how countries respond, but also global shifts and challenges that might continue to face Africa's economy. And in that, I would say, let's look forward to next month when we'll be launching the regional economic outlook reports, and the following month when we'll also have the country-focused reports that we dig deeper into each country on the continent, and we continue to watch the global dynamics as we go.
And just before I let you go, Prof, what about Asian economies like South Africa and Nigeria? How are they faring? Just briefly before we let you go.
Yeah, so South Africa, Nigeria, the large economies on the continent are beginning to see restructuring and growth happening. Of course, you know, in Nigeria, the sweep of policies that has been implemented by the current government, which is expected to continue to bring dividends over the medium to the long term. And in South Africa, we are beginning to see the easing on the structural challenges that was pulling down that economy. And of course, South Africa being a major trade partner with the United States, we are anticipating that there will still be some shocks to deal with regard to the trade tariffs. But Africa has ways out to deal with this, because we still have huge headroom in our regional trade to be able to expand and diversify our trade within the continent and harness resources on the continent in order to drive development going forward. So on the whole, I would say kudos to African governments, because despite the huge shocks, we have seen that 8 countries in this continent has been growing at more than 5%, and now about 23 countries will continue to grow at more than 5% on the continent. We are dealing with inflation, we are dealing with debt. Debt is stabilizing, but we need to continue to do more. And that is why we are focusing on how to harness domestic revenue, domestic resources, our human capital, our fiscal capital, our financial capital, to deepen and broaden the scale of our economies in order to be able to be more competitive in a multipolar world.
Thank you so much indeed for your time. Of course, Thembekile, Chief Economist here at the African Bank. And of course, a very important moment. You know that on Thursday they'll be electing new leadership. So with that, back to you in studio.
Khayelihle Khumalo live for us in Abidjan, the capital of Côte d'Ivoire tonight. Thank you.